So the developments in the lending space is really extremely important for us to keep an eye on, because it's really showing the integration or the movement of the digital asset space into the traditional banking space. Now, a few videos ago, we talked about Uphold, we talked about MyCred, and there's actually a little bit more going on in the space than just that. Now, I do want to thank Mikey B. Fresh for telling me about Nexo and Hodl Finance, and also Middleway for telling me about Celsius.network, both recommending that I cover these on a video. So I really dug into the three of them, wanted to create some sort of a cross comparison, really try to analyze to see exactly where the lending space is when it comes to some of these sites. Now, we dug into some of the strengths or maybe apparent weaknesses of MyCred, of Uphold, and so now let's look at the others. Before we get into anything else, hey, this is Jeff with the HODL Report. Join me on today's video as we explore the rapid expansion of the lender borrowers moving into the digital asset space. Banks will either get into the game or they're really going to start losing their relevance in the space. If you're drinking tonight, is Thursday and it's after 8. Einstock from Iceland. This is an Arctic Pale Ale. So highly recommend it. Good stuff. Einstock also has a white, I don't know if it's a white Belgian. I forget what it is, but it's like a white, more citrusy beer, which is really good. But this Pale Ale is awesome. So Arctic Pale Ale, almost like an IPA. I guess it is their version of IPA. But if you do enjoy today's video, please remember to give a thumbs up, leave some comments below, and as always, if you haven't subscribed yet, go ahead and subscribe to the channel. Now, let's get into it. So what is amazing is that the lending borrowing space for digital assets, again, is growing at a very fast pace. And again, the lines are really beginning to blur as to who is going to be the big winner in all of this. Again, is it going to be the retail consumer to invest their digital assets to get a return for interest earned? Because if your digital assets are sitting there not doing anything, then why not get interest on it? We need to look at the companies that are providing this service. I brought it up last time. One of the key points here is that we have to look at security first, or is going to be the big institutions who are really going to begin working with the custodial type companies. Now, as we look into Nexo, Hodl Finance, and Celsius.network today, we are definitely going to see a clear differentiation as to their prime target audience. We'll also quickly see that Celsius is really more of a marketing guru to the retail lender borrower with really limited exposure to the finance, investment, and banking. So we'll look, you'll see, I'll analyze it, and we'll definitely talk a little bit more about it in a second. But before we do, I did want to highlight a few important points. If you remember on my last video discussing MyCred, the Uphold lending borrowing partner, I did make a clear statement. I mentioned in the beginning that if you're going to even put $1 of your money into a bank or exchange to lend or to borrow, you definitely want to know that they're FDIC insured, something that MyCred at this point is not. And why have FDIC insurance? Typically, FDIC insurance will cover up to $250,000 held if it's in a standard bank account. So even in a checking environment, and if you have that kind of money, you never really want to keep in excess of the FDIC insurance, because if anything ever happened, then whatever's in excess isn't going to be covered for you. So that's really important. Now, insured and protected is really going to be the theme as we look at the three specific companies, Nexo, Celsius, and Hodl Finance. Now, to point out before we start talking about them all, Nexo uses BitGo custodian services. Celsius claims to use BitGo. They state they use BitGo as well as others, But really, who is BitGo? Now, BitGo is really considered to be the most secure custodial service that's backed by Goldman Sachs, and which has clients like Upbit, Pantera Capital, CME Group, Kraken, Genesis, SBI, and also Ripple. So now let's move over and let's start taking a look at these three. Okay, so the first that we're going to take a look at here is Nexo. So we have Nexo, we have Hodl Finance, and we have Celsius.network. So the key here with Nexo, better than any bank account. Let your crypto work for you. The only wallet that lets you borrow instantly in 40 plus fiat currencies. Then as we get into Hodl Finance, crypto-backed loans for millions of crypto hodlers. And we'll actually see something interesting with Hodl Finance. And then as we get into Celsius.network, unbank yourself. Celsius Network, a new way to earn, borrow, and pay. Even if you just look at the way it's laid out, straight on with the apps, as you go through it, it's, I don't want to say gimmicky, but it doesn't provide a lot of substance. So let's leave it at that, and let's start going to Nexo. Then we're going to get into Celsius. So right up at the top here, buy the Nexo token. So a lot that goes on within the borrow lending space is going to be based on the individual tokens for that site. But really, let's get into what's most important when it comes to Nexo, and that's here is guaranteed custodian insurance, and it's the world's largest and most trusted crypto lender. And so let's really understand what that's all about. So as we dig down, we want to look again for what there's a couple points here. No minimum repayments, no hidden fees. I think that's really important. They have a card, almost like a debit card. Spend money instantly by card or withdraw to bank account. And so what I really want to look at here, though, again, is their claims on being insured. So live automated platform. Nexo is fully operated instant lending, seamless user experience, military grade security with 256-bit encryption. Important. But even more important than that is the fact that they're partnered with BitGo to secure all of their crypto asset holdings, and that BitGo is actually insured by Lloyd's, backed by Goldman Sachs, and is CCSS level 3 and SOC2 compliant. You can go look that up, but these compliance levels for insurance or for security have been around for a number of years, and we can talk a little bit about that after. Regulatory compliance. This is also very important. Nexo is using Onfido to adhere to the strictest KYC and AML global compliance standards. Onfido is also trusted by Coinbase, Revolut, HSBC, Nationwide, TransferWise, and Bittrex. So we're seeing a significant focus here on the security. And also, as you dig into this website, what I found is that they're giving you a significant amount of information. So we don't see a lot of gimmicky ads. We do get into Nexo in the media. As we know, especially when we've seen some of these articles coming out on Forbes, it's very easy for these companies to put out advertorials. We don't know exactly when something's written is going to be honest to depict actually what's going on in this space, or if it is, let me close this out and get a little more space, or if it's going to be something sincere. Now, what's most important, though, and let's click on company here. So that's just on their homepage. But when we get into the gist of it, we want to know what's really behind the lending and borrowing of the company. I want to know who the company is, what they support, what kind of numbers they've been generating, what kind of track record they have, how long they've been around. That's all important. We can do all of the about us. What really stands out on Nexo is the fact that they're audited by a third party and they're audited by Deloitte. I think that's key. It's a key point that they promote on the company kind of about us page. And they also talk about EU banking supervision. So CRYTPO adheres to the highest regulatory requirements and has been strictly supervised by multiple European banking and financial services regulators since 2007. So this is really an important component. Again, focused on security. I think that really is everything. We want to know what this company's focus is. We want to know what's backing up. If you're putting your digital asset there, you want to know that if something happens to Nexo, that you are secured. We see how many loans that they've granted. What's the net income margin? Loan applications. They've done 1.4 million loan applications processed. They've given 94,000 loans since 2018. That's loans against digital assets held, and they have a 78% return rate. I think that is really important. Here it gets into talking about who is CRYTPO, European fintech group founded in 2007. So been around for quite some time, been in the space for quite some time, and really, again, this is backed by significant, important companies that also help to really maintain the credibility of who you're working with. So those are all important facets. Now, do you want to put your digital asset in the hands of another company where you have no access to it? That's really up to you. You have to make your own decision there. But again, if you're going to do it, you have to make sure primarily, again, that they are going to be secured. And here we see that Nexo really promotes security. And then we get into the why Nexo. So what I like about Nexo is that they're giving you a lot of information, not a lot of fluff. Again, they really highlight the fact that they're third-party audited. They highlighted their insurance. Here they're talking about 10 plus years of fintech success, reputable advisors. They're highlighting the advisors. We don't see a lot of focus on just fluff, on reviews, on, here's where we've been published. You don't see the user videos. So I think this is more, it's gearing it up more in the direction of being a serious banking lending platform. Now here, if they break it down, I like this comparison as they show Nexo versus other ways of funding. And to me, this is all, again, it really shows that they put a lot of thought into wanting to make sure that they're really providing enough information. Now here also, instant crypto credit line, and there's considerable numbers of the top digital asset space that's represented here. The other feature here is the Nexo card, which is, let's let it pull up here, and we'll highlight it. So the Nexo card is nice. Your loan limit is based on the market value of the crypto assets in your Nexo wallet. Additional credit is automatically and instantly available on the card upon appreciation of your crypto value. So you're able to borrow continuously against the value as it increases, as it appreciates. Obviously, if it depreciates, then you're going to see you're not going to have the credit available, but available right away with a MasterCard. So I think that that's a nice feature. Again, is it the right thing to do? If you're in a bind and you have to borrow against, it's probably better to borrow against yourself than going to a bank and then just taking their money and giving them their money back. But this is also set up in such a way that and you see a lot of the bigger organizations will do that. They'll borrow against assets, and many times it's better if you're borrowing, you're paying out a smaller percentage interest to secure those funds, and you're basically collateralizing your loan with your digital asset. Again, that's a decision you have to make solely on your own if that's something that you want to do. So no monthly annual fees. I think that's important. No hidden fees. No minimum monthly repayment. Payments in local currencies. All of this is important as you go through and really understanding the entire aspect of the technology. So now let's get into the next one. Hodl Finance. Now Hodl Finance is the presentation of it a little bit more simplistic. It's nice. You get a they're global regulatory compliance expert for the company. This is partners from their partners, not directly with them, but global regulatory compliance expert commenting on Hodl Finance. Business developer ex LinkedIn executive commenting on it. But again, you can always get someone commenting on it. They really highlight this to show, look, we have serious people commenting on the site. But you see that often enough that you really have to, again, look for what's most important. And if you're going to be using this type of a platform, you want to make sure that your digital assets are backed up and secured. Now here, choose the loan term. So here you can choose the amount you want to borrow or the amount of crypto you want to provide as a collateral. Now here, post crypto collateral. So you put up the collateral, choose your payment method, receive the cash. They really simplify the process, which is nice. Here they tell you exactly if you're taking a loan amount, here's what your collateral has to be in Bitcoin. So for $1,000, you need to put up basically half of a Bitcoin. You can pick your loan duration based on what you want to pay back. And it's straightforward. It just, that's it, So it tells you, if your loan duration is 10 months, your loan amount you're putting up as collateral half of a Bitcoin, and you have to pay it back in 10 months. Your monthly fee for that is 1% per month, or $10 for the $1,000 loan. So 10%, and very straightforward. Earning interest like the others, you put your money in, and you're going to gain interest on whatever you're loaning out. So let's see if they have any information here. They really don't. Don't want to go into setting up an application. I thought it'd be nice if they just easily had, and I thought before, I thought I was able to easily access it. So I don't like the fact that you have to go in and, you have to, again, they're not giving you a ton of information here on the business. We get into the About Us. We can get into the leadership team. They don't really tell enough about the company. And I think that if you're going to do any kind of banking with them, if you're going to give them your digital asset in hopes that you're going to get a return, that's a negative. However, and this is what I find to be most interesting about Hodl Finance is this here, and this is key. Hodl Finance is the European crypto-backed loans on demand company serving crypto and hodlers around the world. Hodl Finance was established by the shareholders of the commercially successful P2P lending platform Savvy. So Savvy was founded in 2014, 5 years ago, operates in 33 European states. I looked up Savvy. I didn't open up the tab here. Let's open that up. Savvy is like Prosper in the US. So the backers of Savvy were the ones to develop Hodl Finance. And as you go through the kind of the who's who of the leadership team, hey, this is great. They've got some great experience. They had some experience with Savvy, but why aren't you giving us enough information about what you're going to be doing with the digital asset, and how exactly are you going to secure it? And why can't we read about it without registering? I don't know if it's some European compliance or not, but when I go into Savvy, you can go into Savvy and you can see some of the loans, and you can really look and try to get a little bit more information about your P2P lending, investment risk. They give you more information on the credit ratings and exactly how it works. The borrow is Savvy rating, Class A to Class E, lowest reliability, gives you percentages. And so at least here they give you a little bit more info. So but let's move on. So the last one here that I wanted to look at in comparison is Celsius Network. Now, or Celsius.network. Now, this one, it's really geared up, and even this, not Nexo, but even Hodl Finance, a little bit limited in information. You know, I just feel that they're not giving enough info for me to want to say, here, I'm perfectly confident to hand over my digital asset at this point for you to hold on to while you're paying me interest, when you don't even have anything on here to really get into tell me about the interest that you can earn interest. But here I just have a little calculator and that's it. And then we get into Celsius.network, and Celsius.network is real. Again, I want to put it out, but a little gimmicky. You know, everything big print, they're bolding stuff. This is really trying to draw you in to feel real confident that they know what they're talking about. A lot of fluff language here. Industry's largest single dollar loan of $5 million. They funded it. So that means that, oh, now I'm supposed to feel comfortable and confident. I'm not saying that it's bad, but I'm just saying the way that they're really promoting it is in the vein of, to me, not being serious enough. Here it says that they secure with BitGo, which I think is important if that's the case. But when you dig in a little further, it says BitGo and others. So are they just securing with BitGo? If they were just depositing and securing with BitGo, that's a different story. They've only been around since July of 2018. There's a little bit of concern there. The largest single dollar loan, who was that to? And what was it for? And then, you know, they get into all of these articles about the space with their founder here. And so I don't want to see articles. I want to see information on the website that's really digging into the how-to and the what they're going to do to protect you. Now here you get into watch your balance grow. What's interesting, earn up to 7%. Why in the world are they paying 7% interest on Bitcoin gold? Who has Bitcoin gold? You know, and why are they paying 7% interest on that if you're lending it to them? It doesn't make any sense to me. And then on your Bitcoin, they're paying 5%. All right, that's not too bad. But I don't know if I would want to transfer Bitcoin over to them, even at 5%. On a Ripple, 3%. Is that 3% gain enough if they're not insured and properly backed? Do we have confidence that they're truly, and they probably wouldn't put it up here if they were, but are they only securing with BitGo? I think that's the key. And, you know, that's a lesson that we really need to learn, you know, because they're highlighting here, earn up to 7%. But, you know, if you're holding your true USD, you can convert into that. For them, they want to be able to take this and they're loaning it out and using it. So to me, it's just interesting the way they break down their percentages here. Now, when we get into cash loans, you know, why not borrow while they still exist? You can loan at 4.95. I think that, you know, again, you're taking a risk, and let's really get into it, because I haven't really seen anything of that much of importance on the company other than, you know, their mission here, best interest, you know, by doing well, doing good, able to keep all the value we create with our members. They're not really saying anything. It's just a bunch of fluff information. Then be one of the best, because we saw them on Forbes. And HubSpot news, more news and media. You're seeing the owner and founder all over the place. You know, that just doesn't, to me, this doesn't do it. You know, I'm not overly sympathetic to just see a bunch of news articles when I'm looking for information about the company. There's no about us. There's really no background on the company. You know, and so, you know, I don't know if that's really enough. Again, so let's say if you click on cash loans, I'm looking here. You know, I'm trying to figure out exactly how this is secured. They talk a little bit about all these numbers, and they have all these loan to values. At least here's something. We're only interested in doing what's best for you. And they could have fully good intention by what they're doing. But I'm not, again, I'm just not seeing enough. I'm not seeing enough information here to say, hey, yo, this is great. Let's see here. Nope, no credit check. Where was it? Now let me see. Pay back, deposit, sell. And here, how do I pay off my loan in dollars? Where do my coins actually go? Here we go. Okay, my deposit. Let's see. If your coins are being borrowed, the borrower must provide full coverage with cash collateral secured in an FDIC insured account. That's great. I think that's awesome. But look at what it says here. We deposit your coin and tokens with trusted custodians like Bitcoin as well as major exchanges. So on their homepage there, they were really promoting BitGo. But now we deposit them with BitGo and major exchanges. Which other major exchanges are they giving it to? And are they FDIC insured? Because there's really no way to know, because here it says if your coins are being borrowed, the borrower must provide full cover with cash collateral secured in it. This is if your coins are being borrowed. But if you're giving it to them, it just doesn't make sense. In a P2P environment maybe, but it's not really saying that they are doing that. So I think maybe it's just the language needs to be cleaned up a little bit. I just don't think that they're really providing enough information. The way they wrote it up, I think it's just too, simplistic, or they're just missing something. How strong is Celsius? Safer than storing in cold storage? Let's see here. We diversify the assets across multiple platforms, such as cold storage, institutional exchanges, and short orders, in which case we have 120, 150% of the dollar value in an FDIC insured bank account. All right, so that makes me feel a little bit more comfortable. But again, we diversify across multiple platforms, such as cold storage. So these are all such as, and so I don't know. It's, again, they could be completely perfect. I like this though. Do you use my coins as working capital? No, none of the cryptocurrency we hold from our members is used as working capital. I think that's really an important point for them to make out. Who is the custodian? BitGo and other top custodians, but who are they? So I don't like that. If it's BitGo, great. But if it's BitGo and others, then you need to highlight who the other custodians are, and are they providing the same coverage as BitGo? So if you're going to do that, you have to be transparent, and they're not being transparent on that. So, to me, that's a negative. So anyhow, that's my take on it. I wanted to respond back. I wanted to kind of dig through these, give some feedback. Overall, when we get into this space, again, you want to make sure you're doing your own research on the companies that you're going to move your digital assets to. If you're in a peer-to-peer type environment, like on a Prosper or a Savvy, it's typically going, well, I don't know about Savvy, but in Prosper, that it's FDIC covered. That's an important facet. So again, you got to do your own research. You have to decide for yourself if that's something you want to do. At this point, me personally, I'm not going to put my digital assets into an exchange and wonder, every day, what's really going to be happening with those digital assets in that kind of environment, in a loaned environment. When you start seeing some track record, like with a Nexo, I think Nexo is definitely further ahead in the space, and looks like it's probably a safer bet if you are going to decide to collect or borrow on your digital assets. So I hope you enjoyed today's video. If you did, please remember to give a thumbs up. Leave some comments below. Subscribe if you haven't subscribed already to the channel. Share the channel with some of your friends. Last note before I go, not a financial advisor, not providing any kind of financial advice, and really any of the opinions expressed on this channel are my personal opinions. So, and then that's it. So anyhow, Saturday morning, 8 a.m., live stream. Look forward to seeing you then. Until that time, keep on hodling your crypto.